Hello, hello, everybody. Thank you for coming. Today is Thursday, September 30th, 2021. This is episode 4 of this brand new show on the Banter YouTube channel. It's called Trading Wisdoms. I would just like to say thank you to the Banter family. Thank you to each and every one of you for watching, and thank you for your support. We'd also like to ask you to hit that like and please hit that subscribe button as well. Show us your support. Let us know how things are going in the comments. You know, trading can be complicated. Trading can be really complicated. And, you know, what I'm going to try to do here with this show is simplify it for you, is to make it a little bit easier. I am Big Cheds. Most people know me as a chart nerd and a newbie helper. And, you know, where that came from, when I got started, I made a ton of mistakes. I just didn't know what to do. But there were some people who helped me out. And through that journey, I passed on that knowledge to other people. And that really led me to publish this book, Trading Wisdom, 50 Lessons Every Trader Should Know. And that's the origin of this show. Just, you know, as a side note, I wear the disguise for privacy and not for political reasons. The format of the show is we're going to talk about the book. We're going to do one lesson each time. This time we're doing the lesson of sticking with what works. It's chapter 15. And for those of you who are reading along at home, that's going to be page 39. After that, I'm going to do a little bit of market analysis. I'm going to look at Bitcoin, maybe some other things, and I'm going to try to teach you some tricks, some basic tricks. I'm not going to try to, you know, make it too complicated, but I want you to understand the trend, the direction of the price, and hopefully some levels that would suggest that the trend is strengthening or weakening, because that's what technical analysis is. And then lastly, we're going to have a guest. We have a great guest today, Trader Main. So I'm really, really looking forward to talking to him as well. And with that, let's get it started. So most of you know me, or probably know me from Twitter. I can be found there at Big Cheds. The book is Trading Wisdom, available now on Amazon. Please check out the review. It's been very well received, so thank you for that. I really appreciate your support. If you like what I'm doing, you're interested to learn about more, also find me on YouTube at Cheds Trading. I actually have a free series, a free version of the book. I'm doing one chapter at a time. There's a playlist. Please check that out. And if you're interested in some premium education, check out Bitcoin Live, where I am a founding analyst and very proud of my involvement with that. But for right now, we are going to start out with the book. I'll leave this about the author and introduction section up for you to pause and read later. I won't waste your time now. Time is valuable. So we'll jump right in. And like I said, we're going to do today lesson 15, stick with what works. Once again, thank you, everyone. I appreciate you watching. Go watch the other first 3 episodes as well. They're in that playlist for Trading Wisdom. So we're doing lesson 15, stick with what works, page 39. So it's a pretty simple concept, right? What does that mean to stick with what works? So, you know, simply put, it means you want to try to ride your winners, right? If you've correctly, you know, picked the direction, if you've got in at the right time, you want to try to ride those winners. You know, and the opposite of that, and this ties in with a lot of our other lessons about risk management and, you know, how to decide when the trade fails. You know, when that trade fails, you cut it. So you cut your losers. So the quote at the beginning of the chapter, cut your losers, add to your winners, and the rest is history, right? It may sound simple, but it is true. If you find yourself unwilling to add to losing trades and preferring to add to your winning trades, the chances are that you are a successful trader. And that's true. You know, it is really hard to let your winners ride, but you want to think about it this way, right? Let's say the price is in a range. You're not quite sure what it's going to do. But let's say it comes back and it retests some support. And let's say that support is at $100 and you got in at $100. All right. You're not sure what to do, but you do know you're going to cut your trade if it goes below 100, because the whole reason you entered that trade, right, was because that $100 support would hold. You also want to understand, and I'll show you a little bit more of this with Bitcoin. You want to understand where you would be adding to that trade, where that confirmation would show. So you've got your first entry at that level, let's say 100, but let's say at 110, you know, a prior lower high where it was rejected, that might be a level that you would add to your exposure. So you're already in a trade and it's showing a building momentum, right? That's something you want to add to. So this is a mentality, but it's also practically something you have to execute with your trades. What I mean by that is you mark a level on the chart that would show the trend strengthening, right? And you want to add to your winners in that sense. Back to the book. So, but what about the other way around, right? And so what about, cutting your losers? I know a lot of you like to average down, right? What does that mean? Let's explore that topic a little bit. In the book, everyone has heard of the phrase averaging down, but how about averaging up? When your trade turns green and breaks some resistance or support level, confirming your trade thesis, right? Confirming your trade thesis, right? That is a good time to average up and increase your position size. Because you have already correctly picked the direction of the trade, it is advantageous for you to increase your risk amount and ride the trend. This way, you will reap the rewards of continuation. So I talked about that. The other side of that is averaging down. From the book, averaging down is okay if done in certain ways, such as if you've scaled in lightly beforehand, right? That's why, let's say you want to enter, I'll pick a number. Let's say you're going to put $600 into a play. That's your goal. That's the size that you've decided based on your total bankroll. It's a small amount. You want to split that into little lots. So maybe 200 for each lot. So you scale in, you put in the first 200. It's okay to average down in that situation because you started out lightly. You didn't go heavy right away. So if you're in a situation like that, you're bottom fishing. That's really one of the only types of situations where I would coach, or I would say it's probably okay to look at scaling in, averaging down if you were light initially and that second entry is at a key pivot. It's at a key level on the chart. And oftentimes you'll see that one of them will be a diagonal, another one will be a horizontal, or maybe it's a moving average. Whatever it is, make sure that second bullet is also small and that it's at a key level, not just somewhere in the middle. So that's when you want to average down. But really, you want to think about averaging up and cutting your losers, right? And by the way, folks, please hit like, please hit subscribe. Thank you for watching. Back to the book. So, why is it important, right? Why is it important to cut those losers? It's in the book. If you cut your losing plays early, there will be less pressure on your winning plays to make up for those big trading mistakes, right? Less pressure, right? I mean, I know what you're going through. I've been there. So after a bunch of losing trades, like the next trade, once it's up a little bit, you're thinking, oh, this is good. This will make up for the other 5, right? Try not to put too much pressure on yourself that way. Try to look at each trade really individually. But if you cut your losing plays early, there'll be less pressure on your winning plays to make up for those big trading mistakes. By the way, you got to avoid your big trading mistakes by limiting your risk and cutting your losers. I know I'm repeating myself, but it's important. This is a key component to any sustainable trading strategy. As you examine the chart on those plays that you're holding, this is what I talked about earlier, right? So, and I'll show you with Bitcoin what I mean, maybe with some other things. Make sure you have that level marked where you would average up in addition to where you would cut your position. So when you enter, obviously you have your entry, then you have your stop loss, which is probably a level in the chart. But also mark out where your idea would be confirmed, where that momentum would be increased, right? So that's what we're talking about, when we talk about cutting your losers and adding to your winners, right? The chapter ends with a quote. It's okay to be wrong more than you are right, as long as you cut your losers and add to your winners, right? So think about that. You don't have to be, you don't have to win every trade. You don't have to win 60% of trades. You don't have to win even 50%. Some of the best traders win less than 50% of trades because their losers were small. They limited their risk, but they added to their winners. They added to their bigger trades. They capitalized on that momentum, right? And we're going to kind of explore that topic a little bit here with Bitcoin. So, or with the chart in general. So we're going to talk about the chart a little bit for Bitcoin, and we're going to bring on our guest trader main. Looking forward to that in just a little while. We're here on the daily candle. It's closing in just under 3 hours. And if you can go back and you can review what I talked about last week or on Twitter, wherever, I still think we need to remain focused on a key horizontal level, which is the highs of January and the lows of February. So we had that level established. We broke up above it. We did the head and shoulders top. Head and shoulders met its measured move, right? The height from the head to the neck base, extended us down, landed in this rectangle. We did sideways for 80 days, right, in the rectangle. And the rectangle is a well-defined horizontal range with the resistance right around 42, 41, 42, 43K, and the support right around 30K, and that well-defined horizontal range. So what you want to understand with classical charting, and really with anything with candlesticks, Japanese candlesticks, the longer you trade in a range, the more significant the break of that range is. So we got our break. We got our break here in early August. We broke above the top of the rectangle. We had that initial fake out here on the end of July, came back, found support nicely and accelerated. We broke out. So that was a significant breakout. But that breakout, as we've talked about, was in the context of the larger consolidation here on the weekly chart. We made that high back in March, April, 64K. We made our low here. We found support at the simple moving average, the 50, the orange line. And after we broke out, we were on watch for a lower high, because you need to understand that moves need to digest. They need to consolidate. You can't just go up like that forever. You can go up and you come back down, and then you find your higher, your low, and then you have a lower high, a higher low, right? You get that tightening range. And what you need to understand is that trends tend to continue. So this consolidation, more likely than not, will lead to a bullish continuation. But that will depend on the texture of the consolidation. What that means is, on the daily chart, do we hold key levels? That key level is 42K. That's the bottom of that level of this key horizontal. On the weekly chart, that level is going to be this orange line, the 50-period simple moving average, right? There's exponential moving averages that give more price weighting to short-term price movement. Here I use the 8 or the green line, right? Well, it's a green line, but it's the 8 exponential moving average. And oftentimes in a strong uptrend, you'll see the price use it as pullback support. Things slowed down. We had our head and shoulders top. We've discussed that before. We pulled back. We found support here. And if you'll note, if you'll observe, because that's what you want to do as a chart technician, you want to observe, you want to look for signs and clues in the price action. We can observe that the price has not closed below that 50 moving average since all the way back to April of 2020. So if that were to happen on the weekly chart, that would be a sign of weakening bull force. We do not want to see a close below the orange line, the 50 moving average. That's the weekly view. That's in the context of the larger, broader, primary, which is primary uptrend, right? It's a bullish trend likely to continue. But we're on watch for signs of that may fail, right? So that's what we're looking at on the weekly chart. On the daily chart, we've talked about this key level. We should talk about also the 50 moving average, the orange line. When I was talking orange line, we were talking in the weekly chart about that. Let's just zoom in here and take a look at this clue we had on April 19th. This here on April 19th was the first close below the 50 on the daily chart since like 7, 8K, maybe 9K area. And that was a sign to watch out. It consolidated a little bit, it bounced, and then it continued on lower. So this is the type of signal we'd be watching for potentially on the weekly chart. We don't quite have that yet. As a new trader, it's tempting to just draw these diagonal lines here and think you think you've got it. But if you use a diagonal line, you need to use a horizontal line for confirmation. So let's put that into action right now. What we have right now in this kind of small cluster, right around 42K, is we have the clear lower high structure. There's a high. Well, here's our high, lower high, lower high. So you see these wicks, right? The top of the candle we have yet to break a lower high. So even though you can make some argument for a diagonal break here, really, we haven't broken that horizontal. So what I like to talk about is called a two-level filter. You identify a lower high, which would be right there, right? And this is on the daily chart. So for me to be comfortable going long, I really would want to see the price above. Sorry, that's not what I'm trying to do. I'll move that lower. I lost concentration for a moment. This is the level 44.4K. We've seen other people talking about it because it's the lower high that needs to break to suggest a momentum reversal. So to put into practical use what I talked about earlier in this show is, let's say you had bought right here. Let's say you had bought right around 40.5K here. Your stop loss was probably pretty well defined, maybe these recent range lows. So you would have cut potentially on a break below that 40.7 level. We're about to bring in our guest here in a few minutes, so we're excited for that. This is where you might have set your stop loss. But where might you have averaged up? Where might you have added to your winner? So to put into action what I talked about in my show earlier, you would have said, okay, if I'm in here, that's my stop loss. But if we break above this lower high, I'm going to add to my position, right? That's a level that you can add to your winner. You can add to your position. That's really just a basic explanation of that concept. Do we have my man Maine ready to go? I see you in the side there.
Ready to.
I'm going to. Awesome. Let's remove my thing. How you doing, bud?
I'm good, man. How are you?
I'm doing great. I just want to first of all say thank you for coming.
Yeah, thanks for having me.
Definitely. Where can we find out about you if we don't know who you are?
Yeah, so I go by Trader Maine on all platforms. So Trader and then Mayne. I'm primarily on Twitter. That's probably the best way to get in contact with me if you want to DM me or just interact with my posts. I've also been getting kind of pretty active on YouTube lately. So same tag, Trader Maine on YouTube. I do 2 videos a week on there. I do a live stream every Sunday going into the weekly close, and then I do an altcoin review every Thursday. I also got a free Discord that you can join. All that info's in the bio of my Twitter there.
That's awesome, guys. Definitely check him out. He's quite active on Twitter. I'd say he puts out some really nice work, which is why I asked him here today. I'm definitely a fan of what you do.
Thanks, man.
But yeah, definitely. First time we've ever talked.
Yeah.
I'm excited about that. Why don't you tell us a little bit about kind of your trading style, or a little bit of that, and then maybe we'll talk about the market after that.
Sure. So I would classify the type of trading that I do as price action. Most people, when they see my charts, one of the reasons they're kind of drawn to the type of charting that I do, and the reason I was drawn to it as well, is kind of just the simplicity of it. So I don't use any indicators. I'm not using volume. I'm not looking at, the order books. I'm not doing any of that kind of stuff with moving averages. I think there's a lot of ways to skin the trading cat. I think a lot of people get caught up being like, okay, well, what is the right way to do it? And that's the way I want to do it. What you need to do is find a way that kind of works for you. And that speaks to you, and then you need to stick to it. For me, that was price action. I'm a little bit OCD by nature, so having these really nice, clean charts with only horizontal lines just kind of is something that made sense to me personally. So if you want to learn to trade how I trade, supply and demand, price action are going to be kind of the types of concept terms you're going to want to look at: supply zones, demand zones, horizontal support and resistance. And there's tons of free resources on Twitter. You can obviously check out my page, guys like Crypto Cred, Trader SZ, the Inner Circle Trader. These are lots of people that I've learned from, interacted with, and trade a similar style.
So I've seen you also, you trade other markets too, right? Not just crypto.
Yes, absolutely. I'm big in the traditional markets. I trade Forex at the London Open every single night. I love trading gold. I love trading, Euro USD, pound dollar as well. But it's not something I tweet about a lot. I think I've built my brand in crypto, and there's obviously a fervor around crypto, especially when things are really bullish and things are super volatile, where, traditional market calls don't get the same amount of engagement, interaction, and love. There's lots of money to be made in the markets. That's what I always try and tell people. Your skills are portable. If you've learned how to do TA on Bitcoin, you can do that same TA a Forex pair or on gold or on any asset that has a chart, including, the S&P 500, whatever you want to trade. So you don't have to pigeonhole yourself and limit yourself to just crypto. That being said, when crypto is going, there's no other market like it in the world in terms of just sheer amount of opportunity and volatility.
That's awesome. I think you're making great points. I think if you just look at it as price action and forget what market it is, I think that helps you focus on supply and demand and key levels like that.
Absolutely. I mean, I tell people who want to learn to trade how I trade, I say, don't look at Bitcoin. Go take these concepts and apply it to the Euro USD chart, because it's a chart you're not familiar with. The problem with Bitcoin is, if you're in crypto, like any of us, I mean, what is the first thing you do in the morning outside of maybe getting out of bed? It's probably looking at the chart, right?
Or before I get out of bed. Maybe.
Exactly. Or in bed from your phone or your iPad.
Right.
Exactly. So you're so used to the price levels and the price action because you've been staring at the same daily chart for a year and a half. So if you really want to practice, a great way to backtest is actually to go and try some of these things out on other markets that you might not be familiar with. It's kind of hard to backtest on Bitcoin when you say, well, I already know what happens when we, hit 40K. We did this because I've been staring at this every day. So I absolutely think that's a great way to kind of hone your skills, is kind of expand your field of view there and look at some other assets.
So I'm curious what your thoughts are on is Bitcoin correlated, or what's the nature rather of the correlation to, let's say, equity markets?
Yeah, so I think Bitcoin lives in that risk asset basket along with, the equity market. I think there can be arguments to be made that, maybe it doesn't, or it's a store of value and there's periods of decorrelation. Unfortunately for us, Bitcoin has only existed in a bull market in equities. I mean, obviously we had the recession in 2008. Bitcoin came around, and we've basically been on the biggest bull trend ever in the equities market. And Bitcoin subsequently has also been in the biggest bull trend ever. It's very easy to get lost in the bull market, bear market, bull market, bear market. But if you zoom out and you kind of stretch the chart out over the last 10 years, what do both of these charts have in common? They go up and to the right. So it's yet to be seen if Bitcoin can exist in a very heavily risk-off environment. I mean, we got a taste of that last year. I guess it was almost 2 years ago now with COVID, when the stock market crashed and Bitcoin crashed even harder. That did not bode well for them not being correlated. And then when the stock market V-bottomed, Bitcoin V-bottomed and then some. So I do believe that there's a heavy correlation there. I do believe Bitcoin is considered a risk-on asset. So I don't think it's a one-to-one correlation where you go, okay, stocks up, Bitcoin up, stocks down, Bitcoin down. But there have been periods where the correlation is very tight. But I do think from a macro perspective, absolutely, Bitcoin is a risk-on asset. And assuming the equities market continues to do what it does, which is go up and to the right, I think that's bullish for Bitcoin long-term.
I think it's a great explainer. And, while you were talking, I thought about that big black swan, the big crash we had. And Bitcoin underperforming, wasn't a lot of that due to just kind of the machinations of the exchanges?
Yeah,
and slippage and all of other sorts of weird stuff, artificial, downward pressure.
Yeah, no, I mean, absolutely. I mean, at the end of the day, something you'll learn if you ever decide to expand to other markets is we are in a very immature, unsophisticated market. I've been trading Bitcoin since 2013. I've only been trading it well since about 2016. But I cut my teeth in Forex, and the way that Bitcoin moves is going to change, and it has been changing. And a perfect example is this most recent top at 64,000. What was everyone waiting for? We were waiting for that blow off the top,
100K.
Big spike up, big dump, big complacency shoulder. And instead we got much more of a kind of 3-month long, Wyckoff distribution type top with the 3 drives and then the breakdown, the retest, and then the real dump. So what we're seeing is the market is changing, and that's going to change because the players in the market are changing. People are getting more sophisticated, and the market, in my opinion, is going to start trading more and more like traditional markets over time as larger players and institutions get involved. If you go look at Bitcoin back in the early days, it traded like a lot of altcoins trade now. right? Where the market making is not nearly as sophisticated. So I think a great example of that, like I said, is that 64K top. It caught a lot of people off guard because we looked at 2017, 2013, 2009, and we're like, okay, big needle top. And then that's how we know it's over. We never got that this time. Whereas you look at Ethereum, for example, or a lot of these altcoins where you still had that kind of, big spike and clean Wall Street cheat sheet type of market cycle. So I do think we're going to see the market change, and I don't necessarily think that's a bad thing.
I think it's really smart. I totally agree with you. I think ETFs, and we get more institutionalized, there'll be less volatility. Yeah. Right. Because we can't have, whatever 20, 30% days or whatnot.
Don't say that. We need those 20, 30% days.
I love the volatility, man, right? As a trader, it's like, it's funny, I put out a tweet, or I have a quote for my book. It's like, an opportunity is something when you see it, and the rest is like a forced trade. Yeah. And it's really true. Those big volatility events, you're like, oh yeah, this is it. All right. Let's go.
Yeah. Yeah. When crypto's running, you remember why you're in crypto. Yeah. It's almost too much. And one of the things I really enjoy about traditional markets is there's kind of a schedule to it, right? There's periods of volatility. There's periods when the market is dead. There's period when the market is actually closed. Your account balance is in US dollars or whatever currency that you hold. And you can take time away. Whereas when Bitcoin is running, you kind of have to be so locked in. It's so draining, and it can be so stressful because, you're long one altcoin, it went up 10%. And then you see on Twitter, everyone's posting, oh, well, I'm in this one. And then it went up, 50%. You get that FOMO. And it's something that I never really experienced in other markets until I came to crypto, where even if you're making money, you feel like you should be making more. When Bitcoin runs and it's volatile, I've never seen anything like it in the world. And I wouldn't change it. It's amazing that we have the opportunity to be part of this still this early on.
So, and great wisdom, by the way, thank you for that. Do you think we've topped out for the year, 64K, or are we going to, not to put you in the spot, but to put you on the spot here?
Yeah. So, every time Bitcoin's corrected, like 50 plus 60%, usually that signals the start of a bear market, right? So the things that I'll frame it this way, I'll sit on the fence. That way I can just only cut the part where I sound right and then post that on Twitter later. For the bear market argument, we had a huge run up to 64K, 20x off the lows, huge crash, major breaks in market structure on every kind of high time frame, significant, swings were broken. We retraced right into that macro 61.8 fib from the 64K top down to the 29K low. You pull your fib from the high to the low. We came right up into that kind of sweet spot where those lower highs generally form. The weekly chart looks a lot like complacency. On a lot of high frame on F, a lot of these charts look like complacency. So that's going for the bear market. There is that uncertainty in the macro environment. The dollar's rallying, stocks are looking potentially like they might be showing their first signs of weakness. Maybe the ETFs get denied. Maybe the SEC decides to ramp up regulations and taxation. That could all lead to a bear market. What's making me question that and lean potentially more bullish is generally we haven't seen a 3-month-long accumulation period before a lower high. It doesn't mean it can't happen, but the fact that we spent so much time in that 30 to 40K range and then broke out, and the reaction we're seeing from altcoins in terms of, massive new all-time highs, the NFT market going crazy, the potential of an approval of an ETF makes me lean, kind of hesitantly bullish. I'm still being cautious. The way that I trade is level to level. So at this point, after the run from 64K, it's not a matter of being all in or all out. I'm like, okay, as long as we're trading above, 40,000, I'm bullish. If we get above 50,000, I'm bullish to, new all-time highs. If we start trading below 40,000, then I'm going to, kind of replan or re-strategize what I'm doing. And I think that's kind of what makes the most sense for me as a trader. Obviously, if you're an investor, I don't know, zoom out. Do you think Bitcoin's going to be higher a year or 2 years from now? probably. So, what are you worried about? But for someone like myself who's actively in the market, I think you need to treat it like a trade, right? Where is my bull thesis invalidated? As long as we're above there, I'm looking for longs.
And you're speaking to my heart, man. I love it.
Yeah, and that's where I'm at right now. I mean, we held 40K here. It looks like, again, for now. But now I want to see bullish market structure. I want to see follow through. And if we don't get that, I'm going to trim back exposure, maybe start looking to hedge with some shorts and kind of take it that way. But I'm hoping Q4, which has historically been generally bullish for Bitcoin, remains to be that way. And hopefully we're seeing new all-time highs. I think a really good line in the sand is getting back above that 50K level. I'd be very surprised if we got back above 50K and then didn't go on to make a new high.
I love it. That's great advice. Those key psychological levels, 30K, 40K, 50. Just a quick reminder where we can find out more about you.
Trader Main on every platform. So if you want to hit me up on Twitter, I've got a Discord. It's free. We've got like 10,000 people in there. It's a great learning environment. Got lots of free educational content in there. Nothing I do is paid content in any way. You can follow me on YouTube, like YouTube/Trader Main. I do a stream every Sunday going into the weekly close, and I upload at least one other video a week. And it's the best way to get in contact with me. Hit me up in the DMs. I always do my best to answer.
That's awesome, man. Thanks for being a guest here for episode 4. I'm really happy you came, man. Appreciate it.
Awesome. Thanks for having me, man. See you guys.
See ya. So guys, please hit that like, please hit that subscribe button. Once again, thank you for coming, and thank you to the Banter family for this show. Trading Wisdoms is episode 4. You can find me on Twitter. And you can find me on Twitter. I am at Big Cheds. The show is based on my book, Trading Wisdom, 50 Lessons Every Trader Should Know. Find it on Amazon, Kindle, paperback, and now hardcover edition as well. Find my work on YouTube as well. I'm at Cheds Trading. I have a free version, a playlist of the book, Trading Wisdom. I do one lesson at a time. Please check that out. I also do educational live streams, but not that often because I like to focus my long form analysis for Bitcoin Live, where I'm a founding analyst. So if you're interested in that, please do check that out. Till next time, I really do want to say thank you. I appreciate each and every one of you coming here today. I wish you well, wish you good luck in your trades, and Big Cheds out.